Hello everyone, I am a spare tire in the capital world. Today is 11:00 noon on July 9, 2025. So in the last video, I have repeatedly emphasized to you this 3,286 and this location near this 3,202. Arriving in this last video also clearly shows I read this high altitude thinking. No matter how you intervene halfway, our high altitude thinking has not changed. So gold has finally fallen. Although technically speaking, putting aside any news, the gold price will also cover this 3,286. But you know what? I'd better tell you from this news. This impetus asked President Trump on Monday regarding the news that Japan and the central bank have imposed additional tariffs. This led to a decline in market risk preferences on Tuesday. In other words, gold gapped higher and then began to fall, always suppressed around this 3,325 to this 3,30. What about Trump? Letters were also sent to a dozen countries threatening to impose a tariff of 40%. That is, Trump will take the trade agreement reached between countries and the United States. The weakest deadline has been postponed to August 1. What about the threat of these tariffs? Although it triggered a partial safe haven buying order, but the strengthening of the US dollar. It was these 2 days that limited the increase in gold. Same time, there was an auction of US debt on Tuesday. If you say you saw yesterday's news, it should be very clear. US bond yields are rising. After US debt fell for 5 consecutive days. What about this week? The meeting held many tenders for national debt. In other words, the market's demand for debt repayment has weakened. Then, the US debt of China and too fell across the board. This means that the price of a gold is suppressed in disguise. Yesterday at 11:30, 30-year US bond yields. It is the first time since May that it has approached 5%. And this American, my 20-year US bond yield, as in the past 4 years. The first closing price was below the 30-year US bond yield. You may not understand. What kind of concept is this? Let me tell you briefly. Through this change can directly reflect the long-term part of US bond yields has returned to normal. In other words, the long-term yield has increased. So does this mean that markets are beginning to expect that the Fed may cut interest rates in the future? At the same time, they are also betting on an expansion of the fiscal deficit. This led to an increase in the supply of US debt. Well, it also shows there will definitely be an event to cut interest rates in the future. But recently, there may also be a liquidity crisis in the US bond market. The most obvious manifestation is the rise of the dollar, a sell-off of gold. The same, once liquidity appears in the US bond market, then the price will be subject to a huge sell-in. In other words, the price of gold will be lower than 3,202. That means the location of the last round of 3,120. It may be refreshed and broken. Then the 3,000 mark may become a place in August. So focus on the day gold price in this support area from 3,284 to 3,270. Once it falls below, it will continue to 3,245, be 3,220. We've been looking at this low point last month. So conversely, if it stabilizes above 3,311. So I personally think the bullish time will still be next week. That is to say, when our 3,202 arrives, we will start the next round of this long position layout. Then the goal above is the 3,006 barrier. So if 3,202 fell below this point, let's find a better location to lay out. So all you care about is, will 8,202 be one of these rounds, a lowest point in gold? So when I re-quoted it last Sunday, I told you, not so far. And the directions can be more, but the entry position requires us to constantly adjust. That means today's low point in gold. It is expected to occur below this 3,270. Well, at the same time, we should pay attention to the rebound kinetic energy of the European market. It may become our day to lay out. Bearish timing of this intervention. It's still the same sentence. The gold price did not stabilize before 3,365. Any point can be used as a high-altitude layout. After 3,202, let's follow the trend. to trade. At the same time, we must also start to lay out this long-term plan. But this does not mean that you are 3,202. You must go to Dali Kuantan to make more gold. Then this is not advisable. It's just that when I get to this position, there will be a short-term rebound. So at this time, we need to pay attention. This range, can it satisfy our long-term direction plan? If not, so while we're doing short things, what about? We took advantage of the trend and waited for a lower position to make a deployment. Can you understand this?